Tune in to the Fintech Files for exclusive interviews with fintech executives and thought leaders. We will talk about how the industry will overcome the crisis that has marked the start of the decade, how it can be part of the solution, and how the financial world will evolve in the next decade. This is your host, George Alaferis from Arama.
I'm so grateful for having this next guest on the show. His job has to be one of the most exciting you can get right now at the intersection of strategy, venture capital, and fintech. Alokik Advani leads the Fintech Strategic Investments team at 8 Roads, a global venture platform. Prior to that, he was head of principal strategic investments at Goldman Sachs. He'll share stories about his career and incredible insights for founders and entrepreneurs in fintech. Alokik, welcome to the show. Thank you so much for being a part of this.
Thanks very much for having me. It's a pleasure.
So we're recording this mid-June in the UK, and we're still officially in lockdown. Can we start by asking how did this situation affect you both personally and professionally?
Sure. Let's start professionally. I think, my role, like many other VCs, required significant amount of travel. And it's built around relationships with people, whether it's entrepreneurs, other VCs, financial industry professionals. And so we have to be creative about nurturing and building those relationships remotely, largely reliant on Zoom and WhatsApp. And I think that's gone quite well. People have gotten quite used to spending, inordinate amounts of time on Zoom, being very much present in each other's homes and getting to know each other a lot better. I think in terms of the work side, we immediately started looking at our portfolio and started ensuring that our portfolio teams were firstly healthy, could work from home, and also had enough cash runway to last the crisis and beyond. And I think lastly, on a professional side, we started looking at our pipeline and triaged it to ensure that the deals we were looking at fit into the core fintech themes that we thought were the most interesting and were a clear strategic fit with Fidelity International. And then personally, it was a big change, probably for the better. Given the lack of travel and physical meetings, I got to spend a lot of time with the family. Having 2 young boys, the time at home has been invaluable. I think if you ask my wife, I'm sure you might get a different answer, but for me, it's been a joy.
All right, and I can relate to that. I also have 2 young boys, 4 and 1, and although it's a lot of pleasurable time, I can say there's a few challenges that I can discuss as well, but we'll leave that for another time.
Absolutely. I mean, most notably the homeschooling.
Yeah, mine are not yet at school, but they like bouncing each other up, so it's managing that in a small flat. So, and what do you take away from this? Do you think so in terms of lasting effect? For example, in terms of creating those relationships, are you eager to go straight back into traveling as soon as you can, or do you think there's now efficient ways to save money and time on traveling and do it via Zoom when you can? Do you think this will?
Yeah, it's a really interesting question, right? And we've done some surveys across different businesses, and the input you get is a fewfold, right? So first is people at the current state have gotten very used to working from home, and they're quite comfortable on a future, into the long term, having some mix with a work from home basis, as opposed to 5 days in the office or more. The second part is the travel, right? To me, the first and physical interactions are important to start a relationship. You need to meet somebody, you need to shake their hand, or just sit across the table from them, share a cup of coffee or lunch, to be able to have that, to build something up. But I think to be able to nurture some of those relationships, I think would be more of a balance. And I think that'll be more healthy, and people would be more thoughtful about how they use their time. I think the part about using Zoom and video conferencing as much as we have over the last 3 months, it's allowed you to get almost be more efficient. You're not wasting time. You're not having long drawn out conversations. You sort of get to the point and you get things across. So that's been helpful.
Yeah, it's a feedback that I heard a lot. It seems like people have, after they've adapted and got over the stress, sometimes for regulated functions like trading, which we didn't even think could be doable. So the future looks like definitely not going back to point A, but somewhere in between. It's going to be interesting to watch. So I would like to talk a little bit about your career. So you've got a vast experience in finance. May I ask what made you choose the industry in the first place?
Sure.
If there was a reason.
I sort of fell into it, right? So I went to a small liberal arts college in the Midwest in the US. And coming out of that, there wasn't a lot of recruiting that came to campus. And so you had to sort of forge your own way. I reached out to the various contacts I had across investment banking because I knew I wanted to get to New York. Um, and so investment banking at that time was the one that provided a solid training ground. But even at the very early stages, almost the first day of training in my job, I knew that I wasn't going to be doing this for the rest of my life. Like I knew that it was somewhere where I wanted to learn, I wanted to develop relationship skills, but that I thought it would be a stepping stone towards getting deeper understanding of business. So I started by in sort of financial institutions, M&A in investment banking, advising various kinds of companies in the financial space. And I've essentially stayed at that in that domain space my entire career, looking at financial services companies and then evolving into fintech. So I've never looked at a different kind of business in my entire life. It's always been financial services.
All right. And now your focus is very much fintech. And what do you particularly like? What attracts you to that segment?
Yeah, again, really interesting, right? So fintech over the last few years has been this very hot sector, right? And so it's had a tremendous evolution. And when I started in this space in the sort of early to mid 2000s, it wasn't called fintech yet. And we were just making investments in market structure changes or inefficiencies or sort of tools that can help you perform services better. As the sector evolved, I think what was interesting was the need for disruptive change was sort of staring you in the face constantly. In every interaction you had with your financial services needs, whether it was payments or lending or credit or other things. And always looking at the fintech investing world, for me, it was looking at it through the strategic lens. First at Merrill Lynch, then at Goldman Sachs, and now at Eight Roads, where there was plenty that needed to be improved. And in each of those phases, fintech always went through the same evolution in every country around the world. It started in payments, then lending, then wealth and insurance. So the part to me is it's almost perpetual disruption because you're constantly seeing an evolution and people try and do it better and faster. If you look at the ways in which it evolved in the US versus China, it's completely different ends of the spectrum.
All right. Yeah. And do you think, I mean, now we talk about fintech, we didn't talk about it before. It seems as well that in the conversation that people were having, the technology is a lot more prevalent. When I was in sales and we were talking, we had I realize now that we had a platform for ETFs that was very advanced in terms of technology, but it was never a conversation that we were having with the clients. We're just talking about the products. I would assume that today I would talk a lot more about the technology behind it. So I think there's also maybe a cultural change. I don't know if you see that.
I think that's absolutely right? Because I think that, and you can see this in every single company. Look at every large bank, asset manager, financial institution. There's entire functions around innovation. Some of those are cosmetic, some of those are real deep research, but I think that dialogue has gotten very sort of forward thinking. I think if you look at most budgets and you look at the numbers that JP Morgan and Goldman Sachs and the like are spending on tech budgets on an annualized basis, it's significant billions of dollars. And so it is a core part of the engine. It's no longer a means to an end. It is what's keeping you differentiated. I think the interesting part, again, coming back to an earlier question you asked, George, was how has COVID changed this? I think any financial institution that was resisting remoteness, cloud, mobile, sort of mobile access, etc., doesn't have a leg to stand on anymore because you've all had to do it for 3 months and more. So I think that evolution is only going to be amplified to get to the next gen technologies where there was some resistance.
Yeah, sure. So to now focus on your current role. So you're again leading the principal strategic investment, and earlier on you were doing principal strategic investment at Goldman Sachs. Can you let us know a bit about what is different or
Sure.
what has changed being in a perhaps smaller organization?
Yeah, sure. So maybe I'll describe what we do at Eight Roads,
Yes,
and then
sure,
I'll
sure.
explain to you what's different as well. So Eight Roads is a proprietary investing firm backed by Fidelity, and it's a single LP vehicle where all the capital comes from Fidelity and its related arms, and has a few different functions. The largest part is a ventures organization that makes growth stage equity investments um, in a range of sectors and companies all around the world. Um, the next one is a business called Principal Investments, where it invests in and buys whole operating businesses. And the third part is my team, which is Fintech Strategic Investments, or FSI, And this was set up, about a year and a half ago to make investments where there is a strategic relevance back to Fidelity's international business. So that's Fidelity across everywhere outside of the US. So that could be Canada, UK, continental Europe, and all of Asia Pacific. So that's what we do and my team does. I think the difference when you think about it versus my role at Goldman was, one, the geographic reach is much wider. We're looking at the rest of the world, and at Goldman, for me, I was doing just Asia Pacific at the time, even though the team did that function. I think the second is we're looking at fintech from the lens of the buy side, and that's both across wealth management and asset management. Versus at Goldman, we were spending a lot more time from the sell side perspective. And as a result of the buy side view, the asset and wealth piece is so important, and the changes coming into that space are very different. You've got, active to passive shifts from product. You've got significant regulation coming in. You've got margin compression, and also you have an industry which is, the evolution and the impact of technology has come in slightly later. And that's why it's really interesting and it's fascinating for us to be part of it.
Sure, sure. It's also really interesting to see what Fidelity's approach is to that, because I don't think there's any player in the financial investment space that doesn't want to be involved somehow in technology, and either it's like through just investing or hiring developers, etc., or doing what we do. So just if to perhaps repeat what you're saying. So Fidelity kind of through this through Eight Road has the three options, right? Just an investment or a principal investment or a strategic investment, which I guess can lead to, the idea is to lead to perhaps partnerships, or are this option?
Yeah, so it could be a commercial partnership. It could be closer ways of working together. It could be strategic impact and financial return. It may even result in the future in some potential, majority ownership or acquisition.
Mm-hmm. And so so if we look now at the investments, perhaps you can tell us a little bit what's the common thread, aside from the fact that they're
absolutely. So the way we do investments, so we have a portfolio now of 8 companies. I'll give you some of the names just a couple of them so they can resonate. Moneybox in the UK, which is a savings and investing platform. We have Alpima, which is a model portfolio platform. We have Steeleye, which is a regtech company. Kuvera, which is a robo-advisor in India. And Clear, which is a blockchain company out of Israel. So that's just to name a few. But we have 8 investments in the portfolio thus far. And the way we look at investments, we look at it thematically. So we develop a view on themes that we then use as a basis of how we do this. And those themes come from extensive conversations inside the Fidelity organization and extensive conversations and relationships that we have outside with VCs, with startups, with advisors, etc. And so then we join those two dots to get a view as to, what we think those themes are that are interesting. To give you an example of a theme, we think the sort of the expansion of open banking to open finance is really interesting. We think the construct of tokenization of financial assets is a very interesting thing. We think the ability to work with corporates and provide services into their end employees is a really interesting theme. So there's a whole bunch of these themes that we're looking at, and we develop a view on a theme. We go very deep on that theme, and then we look at all the different players in that space before we decide what we'd like to invest. And so in the fintech space, given that we're doing this with a strategic view back to Fidelity's international business, we are, we're quite clear, and we say what we're not doing, which is we're not a bank. So we're not looking at the spaces around payments and lending or even potentially insurance. But we look at the spaces around wealth and asset management and anything that may touch that. So it could be digital distribution, robo-advice, blockchains, AI and analytics, regtech, capital markets, and similar spaces that can have any impact to asset management.
All right, understood. And how do you then work to this strategic portfolio or partners? How's the relationship over time once the investment has been made? Do you get involved?
No, we're very actively involved. So firstly, we want to make sure that the strategic alignment and impact of Fidelity can be done appropriately. We want to make sure that we understand, what pain point is this solving for a large company like Fidelity International, and make sure that We're doing the proof of concepts. We're taking it through any sandbox environments. We're testing the technologies appropriately to ensure that there can be a commercial relationship in the near term or in the long term. I think beyond that, we work with the companies very actively. So we obviously take active governance. We sit on the boards, help with strategy, product development. We even bring in experts on our side, which could be HR or talent experts to help develop teams, think about org structures. We also bring in people to help with enterprise sales strategies, pricing, go-to-market approaches. So we have access to a lot of different knowledge resources that can help these businesses grow and develop.
Understood. So it's cap for them, I guess. If you get closer to them, it's the funding, but also a lot more, right? Certainly they have access to all those resources.
And that's our pitch, right? We play in narrower domains, fewer spaces. We know them well, and we hopefully can help you significantly.
So to dig a bit further into the specific of the investments, are there, so of course if they are inside the themes and they somehow appear on your radar, are there particular elements that you look before investing? And I guess it's at a certain stage. This is companies which are already running, and perhaps we should call them scale up.
Yeah. So we usually look at companies in the Series A, Series B stage. So they're still quite young companies and small teams. I think that the key things that we look for at always is the team, right? Because this is a team that you're going to evolve with. You're going to go through ups and downs, and you want to make sure that it's a team that you can work with, support, and back through the good times and the bad times, right? I think the other thing that we look for is that in a business, there's somebody who clearly understands the pain point they're trying to solve and can articulate it appropriately. Because oftentimes that's a miss, where they get the pain point, but they can't really explain why they're solving it or who wants it. Another one is where the founding team also understands their domain, market, and metrics very, very well. That's very important. You want to know what you're doing and why you're doing it. So that's the basis on which we do. But I think that the key part also is people's ability to do this. So repeat entrepreneurs are very attractive. Obviously, we support first-time entrepreneurs as well, but I think it's people who understand the domains very well.
Understood. And I read in an interview from your time at Goldman that you were looking for unloved firms, and now I've seen a few of the firms that you've invested in, and they've been in the press. They had I don't remember what was the award, but anyway, they seem to be very much loved firms by the public. Yes. Is it something that I don't know? Is that part of is that part of your assessment, or are you just happy to see?
Yeah, absolutely. So I think the unloved was almost like things that hadn't been discovered.
Yes, sure.
I think that the focus is slightly different, right? Because of our narrow focus, we tend to find some of the companies where we see the promise, we see the strategic fit, we see the solid teams, and again, as I said, the people who we can back for the long term, right? So it's more about where we have a shared vision, because we come to some of these meetings with entrepreneurs where we have an understanding of the space and we have a view of where we think this space goes. And oftentimes it's matching that shared vision with the entrepreneur. And that's what we're really looking for. Right? We might have, or sometimes being, altering our vision, being inspired by somebody else's vision. So I think that's important. Like someone has to come with the vision, not just solve a pain point.
Great. And can I ask it might be a bit general, but what's the typical advice that you can provide to or suggest to founders, to people who are looking to start up or scale up in fintech, which always require, unlike other sectors, it always requires a lot of capital, right? Just for regulatory reasons, etc. Is there some typical mistakes that you see or typical advice that you can give?
I mean, I think there's probably three things, right? So the first one is really understand the regulation in your space and understand what has been, what is now, and what's likely to be in the future. Because that usually creates the opportunity. Almost most of the different waves we've seen in fintech comes from regulatory change. I think the second is, be very authentic in your pitch, because you're usually dealing with people that live and breathe that product every day, or that service every day, especially in the fintech domain space. People have come as operators, people have come from the industry, they understand that space very well. So be really authentic in what you're trying to do. I think the third one is, again, because of a space that's highly regulated, well governed, and has a lot of experts, surround yourself with good advisors and mentors who can guide you. They can give you some thoughts, they can give you some advice, they can help you along the way, and they can tell you where you're going too far or staying too close, which is important.
Yeah, I find it the regulation that's driving innovation is something that really resonates to me only now. My limited, let's say, interaction with it, or when I was, in the 10 or more years ago, regulators, compliance, it was kind of a necessary evil, or well, I wouldn't call it evil, but anyway. Whereas now, I feel like this fact that it's grown so much, right? The regulatory field since 2008, and also that's where the opportunities are. So I guess that changes really the mindset and the frame. And do you think people are? Do you think you could almost, let's say, monitor, do some regulatory intelligence and build businesses, or let's say find an edge based on that?
Yes, so usually the regulations take a long time, right? So you've got enough warning about what's coming, because they come in, they'll have to do some levels of, there's usually created by some kind of an event, they do some consultations, then have draft reforms that then come out over time. So you've got time to build businesses. But I think many of the innovations have that as a catalyzer. And then, you go through phases of people perfecting that business model, the new business model. Oftentimes, when you've seen people come from traditional tech, Silicon Valley and otherwise, and get into some of the regulatory spaces, it's difficult because no other industry has this level of regulation. And so you may come with an approach of saying, look, I'm just going to break stuff and see how it goes. That doesn't work. You have to get it sort of perfect before you can launch a product. I think the regulators have been very, very open in many countries around the world. When I was in Asia, some of the countries had got some very forward-thinking regulators across UK and Europe. The FCA and the Bank of England have been great in supporting young businesses and creating environments where they can try their product.
Yeah, no, that's fascinating. Yeah, I guess it's a very old-fashioned view of the regulator to think otherwise. But yes, that's how it is at the moment, and it's a good word, I guess, a good place to be in. So now let's move to your outlook. Are there any areas, still within those segments or themes that you're interested in, which you're most excited about right now?
There is, and again, staying closer to our focus areas. The entire wealth management space is very exciting. That's on the direct-to-client side, the intermediary side, so sort of B2B2C, and B2B side. And if you think about, the focus has been so much on payments and lending and neobanks over an extended period of time, where wealth and insurance are the newcomers. That's the new areas. And I think for the past few years, you've seen a lot of digital wealth tools, robo-advice engines trying to address the millennial need. But it was always starting with people with limited resources and very low cost. If you think about then what's happening across UK and Europe with open banking and the promise of open finance and the ability to integrate and aggregate up several different individual providers of your personal financial picture, it's getting much easier. And that construct of data is going to be really, really important to create that picture. And with that picture, you get a much better perspective on providing someone with holistic advice. And there's no doubt that in general, in our view, in my view, is that the advice proposition is sort of broken. Right? Either people can't get it, or if they can get it, it comes with some levels of bias, or it comes with some construct of very high fees. And so how do you provide advice to people that is honest? It's across the entire picture. So you don't want to get just advice on your mutual funds. So you don't want to get just advice on your insurance. I want to get it across everything, to know what my pension is, my investments are, my banking is, my insurance is, etc., to tell me that what I should be doing. I think the key piece is that people don't want more product choice. They don't want more selections of menus. They just want to be told what to do, and to know that some hybrid version of person plus AI is kind of watching their back and watching their finances. So I think that's the end state of where you go, and every bit of information that you gather through your spending and patterns and other things will be giving you, the combination of your expense management, your budgeting, your personal financial management, and your advice piece on the back of at the right price. So we think that space is really interesting. And I don't think anybody's got there yet in terms of giving you that full picture. People are coming at it from the neo-banking side of it. People are coming at it from the robo-advice side of it. People are coming at it from payments. So you've got people coming at trying to get to that holy grail of aggregation and providing advice on the back of it through several different channels.
All right, all right. So, and I guess, yeah, that's, well, I'm not very familiar with those investments that's you mentioned. I mean, I saw Stash Away Money Box as part of your portfolio. I don't know if it's the strategic part. I guess from what I've seen very rapidly, those could be kind of on that path, or
Yeah, absolutely.
they're
And in
part of the
different geographies, there may be different people, right? In an Asian context, you have this construct of a super app, which you do everything through. Order your car through, you order food through, you do your financial services through, you buy movie tickets through. It gets your whole picture. So that has easier integration because it's all within the same infrastructure. I think in some of the US and European markets, you don't have that natural place where you did everything through because you disrupted an incumbent and then it was broken apart into different pieces. So now this construct that the underpinning of the rebundling of financial services from disparate sources, but giving you this overlay of connectivity and advice, which can be very, very powerful. Because for most people, they have a very hard time deciding what to do. Oftentimes, the complexity of product choice or the jargon and the kind of the amount of information they're provided is more confusing than it's helpful.
Yes, yes. No, I wasn't seeing things this way, but sorry, you opened my eyes. Indeed, it's not like, oh, we want to disrupt whatever's here. It's more like it's broken for many people. How do you fix it, right?
Exactly. And I think just to add to that, right, I think the last 3 months have, in my mind, have kind of exacerbated that a little bit because you've had people who've gone through some level of significant strain, health related strains or financial strains and otherwise, and they've gone through a real crisis. For some part of the generation, they may not have seen any version of a crisis or a down market. And so I think people want to take control of their financial picture a little bit more. And either because they've been at home and they may have had some time, or they've seen what's happened around them, they want to be a little bit more in control. And so I think these levels of tools are going to be more in demand to give someone that advice journey for their planning in the future. And just to make sure that they're not running their savings account on £100 a month. They actually have savings, rainy day savings, in the event that they have something happen to them, or unfortunately if something happens to their family, etc. So I think that construct of planning gets a whole different perspective when you've gone into a state of shock like COVID.
Yeah, that highlights as well the holistic approach that you were mentioning earlier. And so my last question is, so you've painted already a picture of, I guess, where do you see the industry going? But how do you see it in terms of if that's the holy grail, when are we reaching it? Of course, very hypothetical question. And who's reaching it? Is it a lot of companies? Is it one big winner like we've seen in tech?
I think it's going to be a few different players that can get there, because as I was saying, you can reach it from different ways, right? So, in the past, the question used to be who's going to get there? Is it the incumbents who are going to finally figure out how to do tech, or is it the fintechs that are going to finally figure out regulation, right? So I think to me, it's going to be a combination, because I don't think either is going to get there without the other. I think that the constructs of understanding regulation and building compliance and things is helpful within large institutions, but I think that the tech firms and the fintech firms are getting much, much better at it. I think the time frame as to when this manifests is actually more predicated on the ability for open banking to extend to open finance. In reality, that consultation, which was supposed to be across the FCA, I think as of now, sort of April or May, has been extended till October. There's a European consultation in July. So this is going to take some time. But I don't think that's going to prevent people from trying to figure out how you do this before the regulation kicks in. So I think that the time frame is probably a year, a few years out. But I think that future state of a more open world where your financial data, with your consent, can be shared with people who you want to. It can create a level of interconnectedness. And then also add to that this construct that your own data becomes your asset. How do you start monetizing your own data, your own spending, your own buying, your own ID, etc.? So that becomes another asset. Right? So you kind of have this whole digital profile of your financial assets, your cash, your investments, etc., and your identity or your data assets. That's the other piece of it. And so that allows you to then optimize across your savings, your investing, your spending, and your planning.
Sure. No, that's really fascinating and enlightening, I guess, in terms of the vision. I think it sounds, very realistic when we hear you. And it's also, I guess, other parts of technology. I mean, my previous guest was talking to me about how secure digital ID verification could be a game changer. And you mentioned it somewhere, so I guess this could be a part of the puzzle that allows to protect the data.
No, and we see that interestingly, right? Like today, it takes you probably a whole bunch of different documents to verify who you are.
Mm-hmm.
And the only places you need that is every time you engage with a financial product. You only need it with financial products and telecom companies, right? Nobody else really wants to know who you are.
Yeah.
And so in that space, if you can create your digital vault with all your documents, your digital ID, which is already happening, these things, and then use that alongside all your financial assets, then that becomes really easy to switch providers, switch products, switch choices. Everything's easy because the onboarding process and the KYC has been such a barrier to sort of more fluidity across financial services that it's a real pain.
Yeah. No, and it's fascinating to see the possibilities if suddenly we remove that and we just have to smile. But we'll leave it for another smile at the camera and we're done. That's been really great. Thank you so much, Alokik. Just a few lighthearted questions to finish off. This is what we do on the show. So I know you started in finance from an early stage, but you fell into it like many of us, like me. What would you do if you were to choose a different career path?
So I always say that my real passion is eating. I love food. So somehow related to the food industry would be hospitality or restaurants or something of that type would likely be clearly a very different path and a different trajectory and not the most ideal one in this lockdown environment. So I'm quite happy that I'm doing what I'm doing right now, as opposed to a restaurant business, which is in real pain. But no, I think something like that would be ideal. And maybe it's later in the career that I can do that.
Yeah, it can still happen. I'll tell a personal anecdote. My film company, Orama, who is now specialized in fintech, we used to specialize in gastronomy. So I filmed hundreds of Michelin star chefs around the world, the best ones, etc. But I didn't love it that much. I wasn't that excited about it. So I decided to go back into fintech. Or finance. There's an intellectual challenge that I prefer. So anyway, it goes back and forth. And then just a quick question, as we know, now we're stuck at home somehow, but I know you've worked in many different places. So New York, Hong Kong, or London, or somewhere else?
So that's a really interesting question. Each of them were very different stages of life. So sort of New York was, fresh out of university, everyone's running at 100 miles an hour, you barely sleep, you're either working or you're out. So that's a very specific stage of life. I think London, my first time in London, which was in 2005, was again, post-business school, still quite active and about. And then Hong Kong was, where I got married, we had children, etc. I think the balance across the three is definitely London. It's a very healthy, sort of balance of work and life. And I think in a future state, that balance is only going to get better, right? It's a combination of a very hard working finance industry, a very strong fintech industry. It's a very, very good quality of life. And also sort of central to the world, right? Where you're kind of equal access in different places. Having been in Asia for 8 years and done lots of late night calls to talk to the US, you kind of tire from that quite quickly as well. So I think for me, if I'm picking from the three right now, I'm picking London. I'm glad I'm here.
All right, yeah, and it's a return, right, to the basis. So well done. Enjoy London, and it's only going to get better as we, get free of this lockdown. And from my side, thank you very much. This has been really great, fantastic insights. It's been really nice talking to you, Alokik.
Thanks very much for having me, George. It's been a pleasure.
Thanks for listening, and thank you to our guests who make this possible. Subscribe to never miss an episode. As this is a new broadcast, if you could give us a 5-star review on iTunes and your favorite podcast player, that would be great. Let's work together to accelerate fintech towards the 2030s.